Well, from an equity market point of view, which is obviously what we focus on, the the benchmark's been set by the volatility that occurred last March, April time. That is going to be with us for some time. And the risk that really comes through is that we project expected returns at an individual stock level, as many investors or fund managers do. But for us, the risk is the uncertainty of those expected returns. And whilst you can see for some stocks, you've got visibility, you've got clarity. For a huge swathe of the market, particularly the more cyclical end of the market, those uncertainties about their outlooks for 2021, 2022 have still got so many other factors in there that could see sudden volatility or changes of confidence, that risk is with us persistently for some time around how companies are going to be delivering cash flows to investors. So the real issue for us is risk isn't going away. We shouldn't pretend we can make it go away. We just need to make sure that we've got as good an idea of an understanding of those uncertainties as possible as we make decisions for 21.
Yeah, I think that's a terrific point, that the models say the implied returns are going to be pretty mediocre going forward, but we know within that there are always specific companies that will do well. Chris, as you run your screens, what names are you throwing up at the moment that you think can stand out next year?
Well, actually, it's the usual suspects, particularly if you look at the US, and I think the S&P 500 is increasingly become the guide star for international markets, just because you see so many of these very large companies identifying where they can maneuver and make revenues on a global basis. So if you're looking at the US, the good news for investors is that you do have some clear visibility around some of the international stocks. You know, it's the usual suspects, it's the Microsofts, it's the Apples of this world, it's the Amazons of this world, but also you're seeing visibility around the likes of Costco and Best Buy. You're seeing the pharmaceutical stocks, the Eli Lillys of this world. All of these companies have got some visibility around cash flows, partly because of what we've been seeing in the last 12 months, significantly because of where we're going to be seeing government spending money around, you know, expenditure on infrastructure, as well as expenditure on directed support for the man in the street. You know, you talk about the stimulus package. You know, the likes of Best Buy and Costco have got visibility of their own earnings precisely because there is a willingness politically to make sure that people are still able to go to those stores. Doesn't mean that they're making stellar returns. It just means that they've got visibility around cash flows, which is really what is key for now. So there's plenty of stocks out there that you can pick on, and even though the overall market doesn't look as if it's going to give you big upside, partly because we've already had a pretty significant return in anticipation of that next year, there's still a significant percentage of the market with visibility that I think investors should be focusing in on, rather than just buying the broad market. Make sure you're buying stocks and assets that have visibility of cash flows.